Hello, Maverick traders. Welcome out to your market roundup. It's July 22nd. Corey here with you. As always, we're going to take a look at what meaningful news is out there. We're going to look at rotations within sectors and then try to highlight our very best bullish, bearish, or neutral trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that we saw equities rally. The Dow didn't really participate, but S&P, NASDAQ, and Russell all up about 1 to 1.5%. And this is something that we hadn't necessarily seen, where the Russell 2000, which is the vast majority of stocks, and then the NASDAQ 100, which is those large cap tech, rallying in unison. So today it was definitely a widespread rally. Daily news, Biden stepped away. Harris emerges as the likely candidate for the Democrats. There's been millions of dollars pouring in terms of donations for the party. Certainly the betting odds have gone up that the Democrats can win. Now, Trump is still favored, but there are some changes that way, and some market participants believe because Kamala Harris is from California, has operated there, is a little bit more friendly with large cap tech, that could be part of today's rally. Was that news over the weekend. CrowdStrike falls again, this tech outage, one company creating massive amounts of problems throughout the world, and specifically within airlines. Delta Airlines is canceling many flights, so it is a little bit of precursor, I guess, to what if there was some sort of terrorist activity, but it was centered towards cyber hacking, and those sorts of things are a danger. And of course, when one company going down and one problem can create this widespread of problems, it is a bit of an issue. And the problem for them is that now they're going to have to go before Congress and all those sorts of things. This is what comes of you screw up. Well, Congress tries to make a little bit of a show out of you and try to win some votes in the process and such. So they're going to have to be put through the ringer in that way. Advanced decline line, about 74% of stocks up today. Certainly a widespread rally, and the 50-period moving average still bullish with 70% of stocks upward trending. As we look at the S&P, we started to give back some ground. You can see how we pulled back slightly below the 20-period moving average, and now we've bounced back above it. But here's the bigger issue. We kind of gapped away from this zone. And this gappy area becomes a bit of a problem for the markets, in that this is kind of the type of sell-off that often is a precursor to more selling. You gapped away from it. That's a strong move. You had some increasing volume. That's confirmation. Now we have follow through over the next couple of days. Now we're in a little bit of the bounce back phase, but normally what happens here is you kind of bounce, but it doesn't have much on it, and we get another leg to the downside. So that's the S&P chart. The NASDAQ, really similar. You can see the gap. You can see the large volume. It's even more pronounced, I would say. We not only broke the 20, we're still below it. So as we're bouncing up, we might find, you can see how it's flattened out, we might find some resistance up underneath that 20 and then turn back down. So I think we could bounce a little bit further, but I really kind of anticipate that, generally speaking, when you see a little bit of a breakaway gap like that on volume, it's not just a 3-day event. Now this one could be. Maybe there's only 3 days of selling. Anything's possible, but generally speaking, see this breakaway gap? Some follow through. Yeah, there's a pullback, but there's more follow through to go. The same way that this took off to the upside, I would expect something similar here. So if we read the tea leaves, if you will, here we broke away. We have a little pullback, but that was just a buying opportunity and more advanced. Here we broke down. Now we get a little bit of a rally, but that's just a selling opportunity for more decline. So if you think that this sell-off is going to follow somewhat of this type of script, there is a little bit more selling to go. Now, if you wanted a market that looks better, certainly it's small caps, it's the other areas of the market. So wouldn't it be sort of interesting if we had an exact opposite market of what we had for multiple months? We had an S&P rallying higher. We had the NASDAQ 100 rallying higher. But we had the Russell 2000 completely sideways. This contains more stocks than those, right? This is only 500 stocks or 100 stocks. Here we're talking about the Russell 2000, or if you look at RSP, which is the S&P 500 equal weighted, same thing, it was going nowhere. So there were lots of stocks not participating. I think what we could be seeing here is a bit of a rotation where maybe these RSP and IWM, maybe a few sectors of the market are fine and continue to go up, but I wonder if the S&P being driven so heavily by large cap tech, I wonder if that's where the area of struggle is. So we might literally have a market that flips on its head. We might continue to see some buying in the equal weight and the Russell 2000 and some of those other stocks, but large cap tech is going to drive the QQQ and it's going to drive the S&P 500. So we'll see, but where Apple goes, where Google goes, where Microsoft goes, where Nvidia goes, those are important in terms of the S&P and the QQQ. All of these other little boxes could move, and there certainly could be a couple of little sectors that continue to thrive even if large cap tech struggles. Now, one area of weakness today was certainly in telecom. AT&T, Verizon, T-Mobile, they were all down sharply. So that was a pocket of weakness. We also had more weakness in energy. So if you're looking at what underperformed today specifically, it was energy and telecom were the two weaker areas of the market while the market was bouncing overall. So that's my take on the markets, in terms of looking at outlooks and risk to reward. I think we might get a bounce, but I'm not going to be surprised at all if we get another leg lower. Now, let's look at some bulls and some bears. We got a few different candidates here for possible trades. Looking on the more bullish side, something like Caterpillar, the chart has a similar look to RSP or IWM. It has basically been left for dead, right? And has reemerged recently. We have a pullback back towards the moving averages. You can see that 20 starting to slope upward. A little bit more strength here for a couple more days, and you're going to get a bullish crossover where the 20 crosses above the 50. I like Caterpillar as a potential first pullback buying opportunity upon a new uptrend emerging. Now, is it possible that this little uptrend fails? Possible, but I think this is the type of stock that I would be looking at because, again, it's more correlated to those other sectors, other areas of the market. So that's, in my mind, where I would look. That's the new strength, those are the new trends, and I don't know that rotation's done with that. So Caterpillar, to my eye, looks pretty solid for a bounce out of this pullback. Something like Palo Alto. Now, I can look at Palo Alto and say, okay, they operate in cybersecurity. They're a beneficiary of CrowdStrike's problems. So that's a positive. But then the other side of it is there going to be increased scrutiny, regulation, all of that? And that's the downside. So I'm not sure which way Palo Alto goes, but the chart is high basing. If we start to break to the upside, I'll give it the benefit of the doubt, but understand that all of these problems for CrowdStrike are not just an obvious, hey, it's all good. So, this is one where I think we could break out of this range either way, and I'd almost be willing to trade it in either direction. If we come down and break this lower end of support, I would play it to the downside. And I sort of think that that might be more likely. So I have this in the bullish category simply because it's in an uptrend, but I think it's an interesting stock in that I'm not so sure that these problems are perfectly good for that company. They may get more scrutiny, more regulation, more problems because of what CrowdStrike is doing. So they may sell off in sympathy. Now, something like AMD, I like this as a more bearish candidate. You can see how we've come down towards these lower end areas where we bounced previously. Now, here's the big bounce. I would anticipate a little bit of a smaller bounce and then further decline. Now, the math on this is it could set up as kind of an inverse cup and handle. If 187 is about the highs and 152 is basically the lows, the size of the inverse cup here is important. And the size of that, if you take 187 high at minus 152 as the low end support, it's about 35 points. So that's the size of the cup, right? From there to there. Well, the handle should be about 30% of the size of the cup, which is about $10.50 is 30% of that number of 35 points. So as we bounce from 152, it should go up to about 162-ish. That's kind of where I'd be looking for an ideal entry point, a bear, and it would really give you multiple reasons to get bearish at 162. So imagine we just rally for another day or two up towards 162. These moving averages will continue to be rolling over. You're going to have a bearish cross coming up in the not too distant future. You can see that it plunged on heavy volume. I'd expect the rally to be on lighter volume. It would be reaching the point for an inverse cup and handle and really where the sellers would come in. And there's a psychological component. How many people have just been hammered by this downturn? When a stock falls from 180s to 150s, it's not that everyone goes and rushes to buy. It's kind of the opposite. You have a lot of buyers that are in an enormous amount of pain and are losing. And so as you try to bounce, they sell, they bail, they say, get me out of this thing. Anyone that's short kind of takes profits and then reissues their shorts up here on the bounce and so forth. So there's a lot of reasons to sell on the rally and not as many reasons to buy. And AMD just really fits with this theme of rotation. So right up around 162 is kind of where I'm looking. And then last but not least, energy just doesn't look great to me. So if I take ConocoPhillips, this is in a little bit of a channel. You can kind of draw a line off those peaks, and you can do a similar symmetrical line here off of the lows. So this would be called a bear flag. Basically, you come down and then you have this little upward flag pattern. It's like this is sort of what it looks like. And this flag, this bear flag, is not really bullish. It's bearish. It's a consolidation after a healthy drop, and we reemerge to the downside. So I would just drag a trend line from that low to that low and just let it keep going across. And as soon as we break that, that is the trigger point for more bearish trading in COP. To my eye, again, does not look good. Bearish engulfing formation up there, increasing selling pressure. The whole rally and consolidation was on light volume. Just looks like it wants to trade lower. We shall let it and try to participate. So big tech likely to underperform. This rotation seems real at this point. Now, ideally, we get a little bit of a bounce for a couple of days. That's the ideal bearish entry point in my opinion. Core PCE comes out on Friday, and we know the Fed watches that for inflation numbers. And then earnings, we're loaded with earnings this week. These are just companies reporting tomorrow. We've got Google, Coca-Cola, GE, Texas Instruments, Tesla, UPS, Visa, and so forth. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.